Mr. Sikri is here with us. Thank you very much for joining us. Long time since we chatted, but I must say that since the last time we chatted, quite a lot has happened. Your stock price has almost doubled, I must say. Good results, but I want to understand from that analyst day we haven't spoken, right? The RPG group companies had met the investor community, and I'm told that your meetings were very hectic and well attended. Talk to me about what were the most questions coming on. We'll come to your results in a moment, but I want to understand what were you most probed by the analyst community and the fund managers who met you that day?
Okay, I think first of all, thank you so much for inviting me on your channel, and it's equally my pleasure to be back to you. I think you're rightly recalled, and I think it's a very interesting question which you asked me. What was the most asked question in the investors meeting? First was that are all the results and the margins which you are sharing with us, the trajectory which you are indicating, is it sustainable? That was the question one. And the second question was, what next? How are you going to scale up the business going forward? These were the two summary questions, at least, which have got stuck in my mind.
Right. Yugal, okay, let's talk about your domestic formulation, your international formulation, and your API. How was the segmental growth this time around? Okay.
The overall business growth, of course, you know, is 15% or so. And in terms of segmental, the 67% contributing domestic formulation continued to drive the growth. It was 16% in the domestic formulation business. In the international formulation business was also not behind. It was 15%. And the API business grew, this time also grew, and grew around a high single digit, which is around 8 to 9%.
Hi, Mr. Sikri. This is Vinny joining in the conversation as well. And obviously, want to talk about your margins as well. You know, those are near record levels as well. How do you see this number growing beyond, you know, just FY24, but beyond that as well? What could be the levers for the same as well in terms of growth for your margins?
Okay, I think it's a question which is generally asked from me, looking at the trajectory of the growth which we have had. It is, I think, fifth consecutive year when the margins have grown year on year uninterrupted. From somewhere around 9 to 10% EBITDA margin today, the Q1 is 23% without a single blip in any of the years. Now, this has been possible because of certain structural interventions which we have had. This is how I normally describe the trajectory. And what do I mean by structural interventions? One is revisit org structure and do the organization optimization, and which means look at the low productivity areas, look at role duplications, look at span of control. I think all of that, as the first intervention we did, we optimized our organization structure, which is likely to stay. That's why I call it structural. The second one was we looked at our product portfolio and did the product re-engineering or formulation re-engineering, which means we revisited the decades-old formulations, look at the formulation, and our R&D worked on it to see that we have the optimized new formulation available to us, which helped us to save certain costs. And the third one was we stopped the leakages, or we reduce the leakages from the P&L, which generally comes in the form of, in a pharma organization, comes in the form of the expiries. So our expiries have reached almost at the industry best standard or best practice standard. That has helped us to improve our profitability, and the all-out efforts on both the dimensions of the cost, whether it is cost of goods or it is OPEX. All the items in the OPEX are diligently looked at, and all of those have been brought to a level which has given us the industry benchmark profitability. When I'm talking of benchmark, I'm comparing with the up to 1,000 crore sales turnover companies. Almost all the profitability indices or leverage ratios or liquidity ratios, all of those ratios we are today a benchmark company. So
Mr. Sikri,
these are the 4 or 5 interventions which have helped us
right.
to improve our profitability and which I normally term as structural.
Mr. Sikri, I'll mix up two questions into one. I want you to, answer that for me because we are slightly short on time. I observe that your profitability is getting into a range which historically, when any company gets closer to 100 crore annual profit range, it is kind of an inflection point. Next 3-4 years after nearing the 100 crore profit range, the growth and profitability is very, very strong in the next subsequent 3-4 years. You're getting there, right? 22 crore this quarter run rate, around 90 crore for the full year kind of visibility, give or take 5-10%. Talk to me about how your new product contribution will increase in the next coming quarter, by which these two figures can combine for the next 2-3 years.
Yeah, I understand where is your question coming from. Yes, any incremental revenue would further expand the margins. This is the take I get from your question. The good thing to note is we have about 28% plus contribution coming from the new products. And those new products is two kinds of new products. One is our decade-old legacy business or legacy products. We have a life cycle management worked out. Close to about over 25 line extensions have been identified, 10 line extensions have been launched, and all of these line extensions add not only to the revenue because of the specific line extension, but it also helps to increase the mother brand sales. And that's one driver of revenue as well as profit enhancement going forward. Second is focus on specialty and chronic business, which generally is relatively more profitable. So our launches have been in those spaces. When I talk of specialty, we have nephrology already in our range. We have entered rheumatology and we have made a good traction or good headway there. We are in future going to enter into the new segments of high end of gastroenterology and high end of dermatology. So those are the kind of the product portfolio augmentation strategy or framework which we have created, which is what we are following and which will help us to drive our revenue as well as profit margins going ahead.
Okay, sir, thank you so much for joining in with us this afternoon on Markets at Noon and obviously giving us an outlook and understanding on what we should be expecting from the company going forward. That was the management of RPG Life Sciences for you all. Keep an eye out on that one.